In this video, I share my thoughts on Tesla stock's meteoric rise to over $900 per share within the past month alone, being a return of over 30% for smart investors that bought the dip. And then I'll answer if Tesla stock is still a buy right now before their upcoming 3-to-1 stock split happening on August 25th. As you'd all know, I've been banging the drum on Tesla stock being super cheap over the past few months, where the share price fell all the way down to $628 per share. Or in other words, a discount of nearly 50% from its all-time high of $1,230 per share, despite the company's fundamentals firing on all cylinders. Get it? So I have been buying Tesla stock with all of the cash that I could get my hands on over the past few months, and so far it's proven to be pretty profitable. And guys, I'm not even kidding when I say I've been buying Tesla stock very aggressively over the past few months, where my position size is now at about $80,000 Canadian worth of Tesla stock alone. Anyways, let's now get into Tesla stock's valuation, some near-term catalysts for the stock, and then their 3-for-1 stock split and much more. But first, please make sure to tap that like button, guys. If you do gain any value from this video, it truly does help out my channel, and I absolutely appreciate that. Alright, so we all know Tesla stock jumped above $900 per share in the past week before falling back down to $864 where it is at the time of recording this video. So starting with calculating Tesla stock's valuation, let's assume the share price is $900 per share to see if it's worth buying at $900. And this represents a market cap of just over $1 trillion since they do have 1.15 billion shares outstanding. Anyways, this once again makes Tesla one of the most valuable companies in the world, only alongside Apple, Amazon, Google, and Microsoft, hitting the $1 trillion club. But do keep in mind that Tesla's share price will be dropping down to about $250 to $300 per share within the next few weeks as their 3-for-1 stock split takes place. But this won't actually affect the value of the company, it's only going to affect the share price. So as of their most recent Q2 earnings report, Tesla earned GAAP diluted EPS of $1.95, up 91% year over year, and non-GAAP diluted EPS of $2.27, up 57% year over year. Now keep in mind, Tesla was able to grow their GAAP and non-GAAP EPS 91% and 57% respectively year over year, despite having their main export hub being Giga Shanghai closed down for an entire month. Giga Shanghai is undoubtedly Tesla's most profitable factory as of now, since they've still been in the early ramp stages for Giga Berlin and Giga Austin, which haven't really achieved profitability yet. In fact, according to Elon, these are gigantic money furnaces. And then there's the Fremont factory, which is Tesla's first and most inefficient factory of them all, and it simply doesn't have the scale of Giga Shanghai. So if these uncontrollable COVID shutdowns in China did not occur, I am almost certain Tesla would have grown their EPS, both GAAP and non-GAAP, well above 100% year over year. Anyways, just stick with me here for a minute as we calculate Tesla stock's valuation. So if we add up Tesla's EPS over the past 12 months, including Q2 now, Tesla has cumulatively earned GAAP diluted EPS of $8.30, and then non-GAAP diluted EPS of $9.89. Then dividing Tesla stock's share price of $900 by their trailing 12 months of EPS, we can calculate Tesla's trailing price to earnings ratio to be 108 and 91. So obviously these numbers are pretty high, and this is why Tesla bears think the stock is going to come crashing down, because other automakers like GM and Ford have price to earnings ratios well below 10. But the one factor that every single Tesla bear decides to neglect is Tesla's earnings growth rate. Currently, analysts are estimating that Tesla will produce EPS of $11.81 this year, which would give Tesla a forward 2022 price to earnings ratio of about 76, but I believe this is underestimating Tesla's earnings power tremendously, and here's why. If we look at another data point, analysts say Tesla will produce $3.08 of earnings per share in Q3 this year, while they're expecting Tesla to deliver 365k EVs in the same quarter. But let's go back to Q1 for a moment, where we can see that Tesla already produced that amount of EPS while delivering far less vehicles, in fact 310,000 EVs delivered. So riddle me this, analysts seem to think that despite growing deliveries by an additional 55,000 units in Q3, Tesla's EPS will drop from $3.22 to $3.08. That doesn't seem to add up at all. If Tesla hits 365k units in Q3, that would be an 18% increase over Q1, yet their EPS is going to drop because economies of scale don't apply to Tesla, right? So do you see what I mean now? Analysts are totally off the mark when it comes to Tesla's Q3 and Q4 EPS, so in reality, I would estimate Tesla produces about $14 of non-GAAP EPS in 2022. And if that were the case, Tesla stock is now trading for a forward 2022 PE of only 64, which is substantially lower than it is right now. And keep in mind, guys, that's only for 2022. If we assume Tesla continues to grow their deliveries deliveries and EPS in 2023 at about 50% year over year, which is what Tesla management is projecting. That will mean that Tesla produces EPS of $21 in 2023, which would put them at a forward 2023 PE ratio of about 43. And although 43 still doesn't sound like a low PE ratio, you have to remember that Tesla is still going to be growing their deliveries and their earnings every single year very quickly for the rest of this decade. And honestly, I think $21 of EPS in 2023 is completely achievable for Tesla, since that would imply a huge slowdown in earnings growth. But again, as we can see, analysts are severely under the mark, where they're predicting 2023 EPS to be $15.93. So as a Tesla stock investor, you really have to recognize this huge gap between analyst estimates and realistic estimates, and that gap presents a huge buying opportunity for Tesla stock in my own opinion, since Tesla will likely continue beating analyst estimates for several quarters or even years to come. Finally, we can estimate Tesla's price to earnings growth ratio, or PEG ratio, which would tell us how expensive Tesla stock is trading relative to its earnings growth rate. So if we divide Tesla's 2022 forward PE of 64 by their 5-year EPS growth rate, according to analysts of 45.2%, we come to a PEG ratio of only 1.42, which is quite cheap, honestly. Alright, so with the valuation out of the way, let's now jump into some near-term catalysts that could propel Tesla stock even higher from $900 per share. And we're going to be reading the upside catalyst from one of Tesla's biggest bulls on Wall Street, that is Gary Black. So obviously the first upside catalyst is the 3-for-1 stock split happening on August 25th. Now a stock split has no effect on the value of your shares, simply the price is changed, but that can actually increase the amount of demand for the shares, so we could see more options traders getting into the market for Tesla stock. And it could be a good reason to buy Tesla stock before the 3-for-1 stock split, especially considering it's still down about 30% from all-time highs. The second catalyst would be the S&P upgrading Tesla debt to investment grade, and that could actually propel a lot more investment firms to invest in Tesla. Believe it or not, some firms only invest in companies that do achieve that investment grade level in terms of their debt. So once Tesla stock is above this level, this could propel some more buying for the shares. Now the third and very important upside catalyst that I can see happening very soon is the $7,500 tax credit for EVs. And as of this weekend, it has passed through the Senate, so they are going to be discussing and potentially passing this bill very soon. The $7,500 credit would apply to all EV sedans under $55,000 and all EV SUVs, trucks, and vans below $80,000. So if we take a look at some of Tesla's models that would apply, obviously the Model S and the X are way too expensive, so those would be out of question. But if we're looking at the Model 3, for example, the rear-wheel drive is eligible because it is $47,000 right now. However, the long-range version at $58,000 is not eligible, neither is the performance version at $63,000. But there is the possibility that Tesla does lower the price from $58,000 to $55,000 for the long-range version Model 3, and that would actually make it eligible for these tax credits, and in that case it would propel demand even further, but we'll just have to see what Tesla does. Then in terms of the Model Y long range, the $66,000 version is eligible, and then the Model Y Performance is also eligible because it's $70,000. So if this EV tax credit were to go through, this is extremely bullish news for Tesla. Obviously not necessary at all given their demand situation, but it would drive demand even further to the point of Tesla probably raising prices by about $5,000 to $7,000. And in that case, this EV credit would end up going straight to the bottom line for Tesla, producing so much more net profit at the end of the day, and therefore EPS as well. The fourth upside catalyst for Tesla stock would be AI Day 2 coming up at the end of September. Elon's been talking about potentially revealing a prototype of the Optimus bot, so that could be a huge driver for Tesla's growth in the future, obviously bringing in a lot of AI engineers, and so overall it's just going to be very exciting to see AI Day 2. The fifth upside catalyst would be the Twitter deal overhang ending in October, so that's when the court case is probably going to be resolved. Now the sixth upside catalyst is the potential for a Tesla share buyback, and I don't believe this is going to happen in 2022 or even in 2023 for that matter. However, Elon did confirm at the shareholder meeting just last week that they are interested in doing a share buyback once their cash position grows to a certain amount. The seventh upside catalyst would be new Gigafactory announcements, so Elon did confirm that they're probably going to be announcing a new location near the end of this year. If I had to take a guess, it's probably going to be in the eastern US area or in Canada, but that's just wishful thinking. The eighth upside catalyst would be the FSD beta release to all of North America in Q4, so Elon did confirm at the shareholder meeting that they're planning on having the FSD beta released to all of North America, and anyone that wants it will be able to get it by the end of the year. Upside catalyst number 9 would be the Cybertruck launch, which is going to happen happen probably in the middle of 2023. But I wouldn't get my hopes up about that because Elon has been behind in a lot of his timelines, so that could be in 2024. Speaking of 2024, upside catalyst number 10 is the robotaxi release that could happen in 2024. And obviously over the long term, the robotaxi is going to be a huge growth driver for Tesla if they can master FSD. Finally, the 11th upside catalyst, according to Gary Black, is his price target of $1,400 per share. Now, I also wanted to quickly point out Gary Black's analysis of Tesla's forward PE ratio. Right now, Tesla is still trading at one of the cheapest valuations it's been in history, despite its huge growth ahead. As we can see in Gary's Bloomberg terminal, the chart of Tesla's forward 2023 PE ratio over time is currently at about 52, which is just as cheap as Tesla stock was trading back before the pandemic occurred. So if anything at all, this should be an indication that Tesla stock is trading relatively cheap. Overall, guys, I do believe that Tesla stock has tons of upside still here from $900 per share. So if you're thinking about buying Tesla stock, this still could be a very good opportunity considering that it's still down 30% from its all-time highs. But obviously don't take my word for it. You have to do your own research and build your own conviction in Tesla stock before actually putting your money in it. Personally, I'll still be buying Tesla stock this year as long as it's below $1,200 per share because I do have a $1,500 per share price target over the next 12 months. And honestly, guys, I hope the share price falls back down to the $700, maybe even $600 level again so we can continue accumulating those shares at a much cheaper price. Because I think Q3 and Q4 of this year are going to be outstanding for Tesla, and 2023 is already setting up to be an amazing year as well. So let me know what you think about Tesla stock down below, and don't forget to smash the like button for the YouTube algorithm. It really does help out my channel. With that being said, guys, see you in the next one.